Hi, welcome to the Market Alert for Thursday, the 29th of January 2015. Starting off in the 5-minute chart, we can see that pre-market, the market was again fairly active. You can see there's a good 100-point range there, 150 from the earlier hours of yesterday morning. So you can see they're quite volatile once again. The market then opening in the afternoon session, trading back lower, trading below the psychological level of 17,450, heading towards the 17,400, then reversing and coming back. You can see here that the market found some resistance at the pre-market high, or just the first bar on the open. They're at 17,483. You can see the market turning down through the 17,400 and heading down to the 17,350 level there, but just not quite hitting it. Then moving back up and then pulling back, and this time we have the support in the market here. We see the market testing and then moving back through the 17,400 and all the way up to the high that we have over at 17,476. So the market was stuck in a range waiting for the Federal Reserve to actually make their decision at 7 p.m, which we see right here. This is just after we see some professional buying coming into the market. The report was more positive for the Fed, not necessarily for the market, because of course we have a Ponzi scheme that's been pumped up with QE money. The report was glowing that there was labour capacity, there was solid growth, everything, the usual propaganda that is supported by the QE farce that we've seen for the last few years. And then, of course, the market took note of what was in the report. That means there's no more QE, which is holding the market up, and then we see the selling coming into the market. Market's held at 17,400, but then eventually breaks, trades back up. You can see it's stuck in that range there, came back down, turned around, went back up, and then at about 8:15, we see the market then trading down. It's just a shame we didn't get the sell signal for this, but again the volatility came into the market and the range of the price bars was such that it didn't allow for the possible signal there. But then it's calmed down on the overnight. You can see there, fairly relaxed picture, just trading around the 50-point range in the very early hours, and more or less the same there at the moment. So you've got a bit of support. You can see why we're down at this sort of level here, from across here at 17,193 there. 17,200 is the psychological level, of course. So the market finding a bit of support there, but still very choppy market here, which it has been for the most of January, which is very unusual. And it's the first time in many years that we've had this situation where we've had this volatile price activity of up one day, down the next day, which is the reason why we've not had as many good signals as we would normally have, because we're stuck in this incredibly volatile sideways action. Like I say, it's an exception to the rule for those of you that are new to PPT. This is not how it normally works, so take heart that we've just got this situation this month where we've got this volatility, because the market doesn't know which direction to go in or what economic news to believe at this time. This is also reflected in the implied volatility, which is a first as well, because we've got this very spike up, spike down type of activity there in the implied as well, increasing yesterday to 16.93, and again reflected in the price chart there as we attempt to come back. What we could do with is a really good shakeout to the downside, some sort of event, geopolitical news or something, just to move the market sharply lower and just to shake out the market at the moment, because this sideways move is neither use nor ornament to anybody. It needs to be sorted, either a break to the upside or a shakeout to the downside to get rid of the weak longs, and then we can resume the normal trading pattern that we saw in December, where we had 400 plus points for the month there. Right, that's it for me this morning. There's not a lot else I can say apart from I've forgotten to have a look at the economic news that's out today, so let me just go back and have a quick look. Let's see what we've got after 2:30. Pending home sales, they're out at 3 p.m. They're forecast to come out at 0.6, the previous 0.68. So again, it makes a bit of a farce of what the FOMC report, the Fed's report, Yellen's report said last night, because that's not indicating strong growth at all in the housing market. Right, that's it. I will see you in tomorrow's edition of the Market Alert. As ever, thank you for your support during these testing times that we're seeing at the moment. So all things being equal, see you tomorrow. And as ever, thanks for watching. See you in the next one.